Well, thank you all for joining us. I hope you'll appreciate we've really gathered three very different investor perspectives for you for this next panel. And Hendrik, I'm going to start with you. I hope you'll forgive me for this description. I think that you represent the mainstream voice on my couch today. You are the biggest fund manager here in South Africa. So I want to start by asking you, what keeps you investing in Africa?
So Lizzy, firstly, it's great to be on the couch with you and with our colleagues today talking about investments. So I invest other people's money. The guys on the left invest their own money. That's it, and Magda does a bit of both. And one of the reasons we're invested in Africa is simply because we have a significant African savers and African institutions have entrusted us with a significant pools of capital from here, of which, particularly in this country, a big part, just over half, is mandated to be invested in this region and has a special dispensation for the continent. So, but they're all willing investors, and we have made, as you've seen in the last year, very competitive returns. If you go from 1870 to 2000, before the US market really ran away, basically returns have been 9% real or 9% nominal in most markets in the world, including here.
What's been your best performing investment this year?
The best performing? So the South African Stock Exchange and the South African bond market's been fantastic, but don't expect that to be repeated. This is a great year after some underperformance. But, you know, we've seen exciting companies created here and developing, and of late there's been, I think, Magda, you've got more unicorns in your technology business in the UK, but there's been 4 or 5 on the African continent, or there have been 4 or 5 in the African continent in the last year.
Well, Magda, you bring a different view to the couch. You're the disruptor on this panel. Sygnia's known for innovation. You've got, I think, $20 billion of assets under management, not all of it here in South Africa. But to Hendrik's point, what's your view, the outlook for 2026 in South Africa?
So look, 2026 is a very short-term time horizon to think about. But you know, if you think about disruption is almost synonymous with technology. And I think, you know, everyone will agree that Africa is being left behind in terms of the technology race. Having said that, you know, technology can originate from a continent. It can also be brought into the continent to benefit that continent. So what we are very excited about is, you know, if you look at Africa broader and South Africa, well, South Africa is obvious. We've got the deepest capital markets and most developed capital markets in Africa. But when you look at everything that is happening in the world of large language models, machine learning, AI, for want of a better word, using the innovation where, you know, that forms the platform of what can happen, you are looking at a continent, and South Africa, where, you know, disproportionately affected by climate change, disproportionately affected by poverty, but also with the youngest demographic. And that youngest demographic is in the business of adoption of technology.
Okay, I want to come back to tech, but Jonathan, you represent a completely different view again. Your family, of course, grew Anglo-American and De Beers into the global mining powerhouses that we know them to be. And now you run Oppenheimer Generations. So you represent the private family capital view on the sofa. What's important to you when you're investing in Africa?
Lizzy, for us, it's simply protecting the businesses we own, so preserving the fabric of those businesses and then making a real return. If we're able to do that, then we can reinvest. And this year, our African businesses, and we have 4 across the continent, are likely to make healthy EBITDA margins. I mean, I won't tell you what they are because you'll all come and mug me.
But you can tell us who's given you the best return.
Oh, that's it's a toss-up between my can business and my drinks business, okay. My soft drinks business.
Yummy.
They're in a race, and we've got 6 weeks to go, and we'll see who wins. But they great returns, and I was just looking at some numbers. I nearly fell off my chair last week. We've invested $350 million of internally generated cash back into our businesses this year. I mean, it's proper money. So that's 35% of the amount that I invested in 1 year back into Africa, and we've got double-digit growth. We've got incredible margins, and we've got operations which I would happily put up against anyone else in the world. So that's the model. The big demander of all of that is time. It's my time, my team's time, and it's an enormous amount of effort on the ground where genuine representatives of the shareholder who can speak as the shareholder are on the ground day in, day out, fighting for every cent that we're making.
So they're the three views. Magda, I want to pick up...
Lizzy, sorry, may I just add to Jonathan? We invested approximately $300 million in this country about a year ago, or committed to it. It took a long time to get all the sign-offs and approvals. We've already seen healthy expansion or healthy returns and potential margin expansion. So if you do the right thing, if you think carefully, you can do well.
But I mean, we're distracting from Lizzy's questions. But Hendrik, the whole point is, it's taken you over a year to deploy $350 million or $300 million. No. Africa is generating 25 million new job entrants every year that need to be consumed, need to find employment. By the World Bank's numbers, the cost of creating a job is somewhere between $10,000 and $30,000 a job. If we just do the simple maths, that's $250 billion of inbound capital that Africa needs to deploy annually. At the bottom end, 750 at the high end. The reality is we can't get $300 million deployed, not $300 billion. Something needs to change.
Well, Magda, you made the point. How do you make sure that that demographic dividend isn't wasted? What's investors' role in that?
Looking at the job creation numbers, and, I don't want to talk about some of the innovation we're looking at, but, we do have ideas of bringing blockchain-type technology into Africa, which can dramatically lower the cost of job creation. It can bring in capital which is scared of investment in Africa simply because of the illiquid nature of that investment. I don't want to talk about corruption because clearly, and I've got a view on corruption, which is, corruption exists everywhere. You just have functional corruption, dysfunctional corruption. Functional economy works, politicians steal. Dysfunctional corruption is politicians steal, infrastructure doesn't work. But if you can find clever ways, and we think... But if we can find clever ways, and we do have some ideas which we will deploy in the next 6 months or so, we think we can mobilize, substantial capital for infrastructure investment in Africa, which circumvents all the existing limitations on what exists currently. And the hope is that we can lower exactly that, the cost of job creation.
But that's a view on corruption, right? Jonathan, you haven't held back in criticizing the government. You said they need to get out of the way of entrepreneurs in an interview with Bloomberg just the other day. Do you sometimes feel like you have a philanthropic duty to step in where governments fail?
Well, during the COVID, we were able to do the South Africa Future Trust, which was kind of stepping into the gap. And that's a different story, but an incredibly successful one, where we ended up supporting over 100,000 people in South Africa through the beginning of COVID. But I think globally we're seeing the consumption of time as a rule. People don't value time. I can't find the right words to describe this. And I was really talking about small business. If you're a small businessman hustling, you're your CEO, your COO, your CHRO, your CPO, your CLO, you're everything. You're also the bottle washer, and you suddenly have to commit a year of your time to get financing because the process is just so convoluted and complex. Your business is bust. It's one thing when a big multinational takes a year to negotiate a syndicated loan facility or access DFI funding. But if you're a small business, you need a decision in a week. And nowhere in the world is it easy to get that decision in a week.
So, Hendrik, is deregulation the answer? Does Africa need to take a leaf out of the Middle East's playbook?
I just want to come back to, Jonathan seized on the point that, I was making the point we invested in this country in a corporate transaction. We deploy billions here. We deploy on the continent, effectively in its capital markets about $35 to $40 billion any point in time. It works. We have, and we're very blessed in the southern part of the continent with deep and proper capital markets, and a good entrepreneur can get access, and businesses like Capitec can be built in the market. In the small business space, we need to deregulate, as Jonathan says, more aggressively and give people space and support them. And I think the support infrastructure is all about making the entrepreneur, the small entrepreneur, the hero in the community, and explaining to people this is the way to go. Not getting a contract from government, not living on your connection in government, but actually building businesses. And I think the thing we need to start celebrating, and if you look at the entrepreneurial energy across Africa, it's massive. It's phenomenal. Just celebrate it and support it officially, because the financial system is there to take it further. I don't think we've got a problem with the financial system.
Yeah, well, the entrepreneurial spirit's alive and well in this room.
Exactly, and there are many people here.
Magda, what's the one thing then that Africa's leaders can do to attract more of that investment to the entrepreneurs?
So, when I look at, and I established a venture capital business in the UK 5 years ago, and we brought in about $500 million purely for investment in UK innovation. And there is, interestingly, there is very little venture capital industry in the UK as it exists. There are founders, there are support for founders and education for founders, but all the capital that gets deployed into supporting the startup businesses and growing those startup businesses actually comes from the US. And effectively, it's looking like, US is effectively stealing UK's IP. Now, let's bring it to South Africa. We have no venture capital industry in South Africa whatsoever. I tried, based on the model that I deployed in UK, to raise money, South African pension funds, for venture capital fund, which would invest solely in UK innovation, South African innovation, i.e. supporting young entrepreneurs. And that's a support which involves not only education, it's helping to set up companies, helping to run those companies for a while. And you know that I could not, from the biggest pension funds in South Africa, your PICs, your Escoms, your Transnets, I could not raise more than 1 billion rand, which in the VC space is that much. So before anything happens in terms of support of young entrepreneurs, we need to get our institutions on board. And even that isn't that difficult. We've got regulation, this Regulation 28, which governs how pension funds can invest. Well, how about putting a slither of Regulation 28 in, saying you will invest as a pension fund 1% of your assets into venture capital funds which support young entrepreneurs. And I think we need to lobby for that.
Hendrik, why do you think it is that a domestic culture of investing isn't taking off in South Africa, like, for example, it is in India, where the domestic investor is dominant?
I think there is a culture of investing. I think there needs to be some encouragement. So what happens with a venture investor here, and particularly the wealthy families, and there are some really, really smart venture investors, but they have no incentive here, and they can get a bigger return by backing their cousin who goes to Silicon Valley and giving him a chance. So I think we've got to sit down and structurally look, how are we going to create an economy that breaks through the 3% barrier or the normal volatility of African economies? It's firstly build a financial infrastructure. We're very lucky. We've got pension funds that can take risk. If I contrast it with the UK, where they've all de-risked, liability matched, then there isn't as much of a pool that could take real risk. We have a chance. We have a chance in Nigeria with a growing DC pot of money. It's really about sitting and applying yourself. We've applied ourselves well to monetary policy. We've applied ourselves well to reasonable fiscal prudence. We now need to say we live in a world where nobody's going to look after us. It's a genuine multipolar world. We've got to recycle our capital, back our entrepreneurs, and let society benefit and tell society why they're benefiting. That's the bit we're not doing.
I also want to ask you about the cockroaches in credit that Jamie Dimon warned about. Because, of course, you've got significant private credit here in Africa. Africa's already considered a risky investment destination. Are you worried about those cockroaches in credit turning up on the continent?
I'm not worried about our African and our emerging market credit business whatsoever, because it's been starved from capital for a long time. Where I worry about in the developed markets, where they've layered layers and layers of credit on top of things. I mean, the fact that First Brand was only spotted by 2 serious investors, and there was a lovely story on Bloomberg or the FT, I can't remember, on it recently.
Probably Bloomberg.
Let's give credit. Let's give credit to Bloomberg because we're on the couch. But it was very clear that credit gets loose, and I think in the credit markets in the rest of the world, these are signs, and I've learned through my career in investments, when you get a first problem, look for the second and third, and I think. But I want to contrast emerging markets because they've had such a hard time, they've been so starved. Credit quality is significantly higher. So I'm really worried about the developed market side until we know whether this was a once-off or whether this is the beginning.
In our last few minutes here, I just want to ask you all, as African investors, your view of the rest of the world, because you've all mentioned the UK a few times. I'm biased, I'm the UK correspondent at Bloomberg. And Jonathan, I wonder if you think the UK is on its way to being uninvestable.
The simple answer is yes. No, so I have a particular perspective. I invest in the business. I'm not a financial investor. I'm an investor in operating businesses. And to operate in the UK, I mean, I don't particularly like the guy, but I was watching a video by Dominic Cummings about the A66 in North England, and they've got this is an 18-mile stretch of road where they want to move it from single carriageway to dual carriageway. And the UK system is going to take 30 years to do that. I could, if I was allowed to build it in 9 months. So long as the UK takes 30 years to do a 9-month project, it's uninvestable.
Magda?
You know, I've spent the last 5 years commuting between UK and South Africa. I've got business here and that venture capital business in the UK. I've just come back to South Africa. Uninvestable. That government is, you know, between the socialism, and I don't know how right the statistic is, but close enough. 25% of the working population in the UK is on social benefits. If you've got anxiety disorder, you can get social benefits. So when you've got a population, and then think about Brexit, which has basically eliminated the skills that were coming into the UK. So that's gone. Try finding a waiter. Try finding a builder.
Yeah.
It's unavailable except for Polish people, so, you know, there's that. But, you know, it's an economy that has completely been destroyed. And because Labour has just come in, we're looking at, you know, 4 more years of this mismanagement of the economy. A scary country, wouldn't touch it with a barge pole. As I said, I find South Africa so much more interesting. But, you know, there are also other countries. I actually find US very interesting.
I make a living out of exploiting the other side of the trade. So we got a pretty okay business in the UK. Yes, all these things are right, but I think the perception is now veering too far. We might probably have an issue in the next year in the UK with sterling being a bit under pressure, etc. But there are many advantages there, and I hope that sense prevails in the political classes. I think you two guys think not. I had a great Polish builder, by the way, in the UK who did a fantastic job in our house. I think there are some pretty good businesses and pretty capable entrepreneurs to back. And the market is relatively cheap, and American capital is going to come and buy it, and we're going to buy it before American capital and sell it to them. So I'm not as pessimistic, but I do agree with you that all the points you've raised are pretty valid, and they're wasting and squandering a huge opportunity in the Trump world. The UK could have been the center of capital, but hopefully, who knows? Thatcher emerged, who knows who's going to emerge there? I wouldn't write it off. It's been around for 1,000 years.
Where would you rather put your money then, the UK or Africa?
Africa.
Africa.
Slam dunk.
You're the ref. You're the decider.
I don't bet on, invest on geography. I look at each business, each opportunity, and I would say there's impact.
Howard.
A cop-out.
Good answer.
Just
Tell
finally,
me where my heart is. That's in Africa.
you've mentioned him, so I'm going to ask about him. President Trump. He's not coming for the G20. Does it cast a shadow over investing in South Africa? Magda?
Look, I think that at the end of the day, Trump administration, first of all, it comes and goes. You know, memories are short. So we've got 3.5 more years of headlines. You know, I've got this theory that President Trump loves to appear in a headline every single day. You know, if he isn't in a headline, it's a bad day. But he is also, his administration is not as it appears. You know, the tariffs are becoming very porous. You would have seen that, you know, no more tariffs on citrus products from South Africa. So, you know, is he negative towards South Africa? Yes. Do I think Elon Musk hasn't, you know, helped our cause? Yes. But I also think that, you know, we haven't sent the right people to the US to lobby on behalf of South Africa. And I think that has been a weakness from what I have seen. But is China a bigger market than US? Undoubtedly, as it stands at the moment, yes.
Well, look, my next panel is on tech. So before we do that, and just to set me up, I want to take a poll. You mentioned that AI in Africa is perhaps getting behind the curve. Who's winning the AI race in Africa then? Let me take a poll. The US or China? Hands up for the US. China? Hendrik?
I think China will win it in Africa. It's busy winning the entire capital goods race across Africa. If you go cars changing, capital equipment, and I wouldn't underestimate the ability of a business like Huawei to really be competitive in slightly difficult below-scale markets compared to the giants, the Magnificent Seven. So there's definitely a race on.
Well, we're going to talk more about this on my next panel later on in the day and how Africa can win the AI race in Africa. But thank you to all of you for your views today.
Thank you. Thank you, Lizzy. Thank you, Don.